Welcome to Business Mastery with Dawn Kennedy, your quick under 45-minute dose of expert insights and strategies to make a positive impact on your business and life. Let's get started. Hello, and welcome to this episode of the Business Mastery Podcast. Today, we are talking all about financial architecture and whether or not it's doing what it should and supporting you in your business with your growth and your goals. So we're going to talk about what we should be doing and maybe how we should set everything up in the first place. So I have Linda here to walk us through all of it. Thank you so much for joining me.
Thank you, Dawn, for having me. I'm really excited about this topic. It's something that is not talked about, so it's I think going to be eye-opening for a few folks.
Amazing. Can you tell everyone who you are and who you serve?
Sure. So my name is Linda Hunt, and I serve service businesses, but a hybrid of that. And I call myself a financial architect. And really, I focus on creating financial structure. And a big part of that is helping businesses actually relate to and use their numbers very differently. But when we were in the green room, you and I were talking a little bit about the P&L and how everyone thinks that P&L is the end all be all. And yes, it is, and it's not. So hopefully we can get into that.
Absolutely. So let's start there because everybody who's been in business for a while, maybe a little more seasoned, will run a P&L. Maybe they don't run it every month when they get started. Maybe they do it quarterly. Maybe they don't even need a balance sheet. But that P&L, and they go, oh, I'm profitable. Look at me. I may not be cash flow positive every week, but I am profitable. This is working. But what gets hidden inside that P&L that requires more architecture?
Yeah. So most businesses don't actually have a financial system. They have a lot of disconnected pieces. So those disconnected pieces kind of mask the numbers that are getting into the P&L, right? So that's where I work with businesses to design everything so that it works together and that the leadership has the clarity that they need to make the decisions. Because, and you said this again in the green room, you said, when you get into your revenue line, you might have 4 offerings, but maybe only 2 of those are profitable and the other 2 are absorbing, right? They're making it look profitable. We worked with, just for an example, we work with a medical spa. And they had, at the time, I think 4 locations. And 2 of the medical spas were supporting the other 2.
Right.
And I was pointing that out, and the owner didn't believe me. And I'm like, yeah, this is what's happening. We have to look at them individually. But her systems wasn't set up to do it that way.
So let's talk about that. Why would we just treat the business, I guess, holistically or as a whole? Why don't we set up these individual financial feeder systems, I'm going to call them, to make sure that the numbers that go into the P&L are actually reflecting what's going on the ground?
So that's a great question. Yeah, that's a great question. And I think, in my opinion, and what I've seen in working with businesses for many years now, is that you start your business, you start small, maybe not so small, but you usually have one person, right, who's kind of handling the financial or what you define as the financial role. And that is typically a bookkeeper. However, as businesses evolve, they usually evolve faster. The systems don't keep up. And I'm not only talking about systems like your accounting system or a software tool. I'm talking about the financial operations, right? And this is the big piece, Dawn, that gets missed, right? Financial operations. Okay, I'm going to beat up on the medical spa today, but
You can beat up on whoever you want. It's anonymized. If you ever hear us beat up on you and it's a guest, I promise it's not you.
It's not you.
It's a learning thing.
Yeah, the medical spa, when we started working with them, she kept, the owner kept coming back to me and saying, inventory is wrong. Inventory is wrong. And I'm like, yes, it is incorrect because the process to get to inventory is correct. And that's what I'm talking about, the systems, right? I'm talking about the process on how to count your inventory, how to, obsolete products. That is in your quote unquote financial operations, and that's happening at your operating level. And that affects profitability. So that's why I call myself the financial architect, because I'm looking at all of this and pulling it together and making sure that it works together so that that P&L can be the end all be all, right? And looking at it individually, right? But you have to look at I recommend that people look at their revenue,
Mhm.
find by offering or
Right.
by location or whatever it is that makes sense for your business to see if that is profitable.
So let's talk about this because you brought up something interesting like inventory. And we've seen things where maybe this is a multi location and everyone does inventory on Tuesday and it gets entered, but there could be a data lag. And so it doesn't update the main. Let's talk a little bit about how financials are impacted by those sorts of operational, I'm going to call them mismatches.
Oh gosh.
Yeah.
I mean, your cost, the biggest thing it affects is the cost of service. Or I'm sorry, not the cost of service, the cost of goods sold, right?
Okay.
Because if you've got that data lag and I'm dealing with and that often happens. This is like what you're highlighting there, Dawn, is a huge thing. And it could skew your cost of service to make you look more profitable. It can skew your cost of service to make you look extremely unprofitable. And you don't know where the number is. And that's why the process, the cutoff, the everyone following the same steps needs to happen because and it doesn't have to be complicated. That's the other thing I want to say here.
Yeah.
It can be simple. Financial systems can be simple, and the simpler they are, the better, because then everybody understands, right? We're level setting it and we're creating that baseline. But yeah, oh my God, it can skew your P&L to make you look extremely profitable or extremely unprofitable.
Right. So let's talk about the places where you need to be collecting numbers that maybe don't appear obvious to most business owners. So we all know we want to watch the cash register, we want to watch the transaction fees for credit cards, maybe counting inventory, but there are other places that drive your numbers that
Oh, sure.
maybe we're not capturing or we don't know that they're going to feed those end reports. Especially as there's more automated software like QuickBooks and stuff where they go out and like they auto sync. There are other places. Where would we also need to make sure that it's like, are those numbers that are feeding us beyond the cash register, the POS system? Where else do you need to have
Yes.
our numbers?
So oftentimes it is that customized system that that business is using, right? Where they're doing say they're doing their invoicing off of there. If there is not a tie out, like even though you might have a direct feed between that custom, let's just call it your custom invoicing system, in QuickBooks, we're working with a company right now where the two systems do not match. The revenue on QuickBooks was doubled, but when you go to the actual system, it's half of that because the system wasn't set up properly. The system isn't owned by anyone
Mm,
internally. And again, I want to point out that's not accounting's job,
right.
right? Accounting is reporting. Then there's financial operations. So when you have a customized system, so now in that system, depending on what kind of business you are, right? There could be say you have a business that has a fleet, right? And you have vehicles. So where's the repair? How are the repairs getting approved? How are you tracking your fixed assets? How are you tracking the life of a vehicle? When do you go to retire it? Right. So there's the equipment drag, I'm gonna call it that. So that's one thing. The other thing is your cost to deliver the because a lot of businesses are hybrid, right? Where there'll be a labor piece and there will be a product, a hard cost piece. Is that getting captured in that system, right? So that you can properly bid jobs. Because that's the other place. Because if you don't have the real data to bid the job, you're not going to be profitable.
Right.
And that's one of the things I see that a lot. And there's a lot of feeders that go into that. And go ahead.
No, what I was gonna say is I know that people listening, someone's gonna be like, it gets depreciated at the end of the year. We capture how much mileage we paid. We captured the gas. We have a budget. We have a fleet budget of X, and as long as we stay in budget, it'll. So I want to point out that that is not a lazy system. That is how we're taught, right? So you allocate a budget per
Correct.
line. You do your budget allocation, you do your projections and you include that. And then at the end of the year, it's like, yay, we didn't spend the whole budget. And then the next year is like, oh, we were over budget. And that's actually how many business owners are taught to treat these types of systems. And it's not laziness. It is really, as we talk about not being more complex, I want to make sure everybody here is like, if this is not what you're doing, it doesn't mean you're lazy. It just means that your systems are operating probably as you were taught to do that as a small business.
Correct. And your assumptions in your budget have to reflect what really is happening. And that's the mismatch there, Dawn, right? That's that mismatch because did you budget? I mean, you might be budgeting the mileage and you might be budgeting the depreciation, but did you budget the fact that the transmission was going to blow or whatever, or the accident? Or it your budget assumptions have to reflect reality. And that's the mismatch.
Right. So you said something very important, which is accounting doesn't own the feeder data. They only own the reporting. And the reporting is always done after the fact, looking back, right? Like this is what happened. It tells the story of what actually happened. So where do the financial operational architecture pieces tell us, well, this is actually what's happening on the ground? Because to your point, how do you make a decision about, do we invest in equipment? Do we make this capital allocation or do we hire new people if the numbers aren't accurate?
Right. So typically what ends up happening, so the financial when the business starts to grow and you're at that level where you need to make those types of decisions, there does need to be a distinct partnership, right, between the financial operations and the accounting, right? Because accounting is only reporting. So they're reporting after the fact and they're reporting, quote unquote, what happened, but is the data being interpreted correctly?
Mm.
Okay, to get over there. So that's often what has to be aligned first. So here's the thing I want to point out. It's not that no one's doing their job.
Right.
Okay, everyone's doing their job. It's just that a well-structured financial function actually has layers. Okay, so you have financial money operations, and that's how money moves. Okay, then you have accounting, which is the accuracy and the reporting, and then you have oversight, which is structure, controls, and visibility. Okay, so I'm just kind of broad stroking it. And then you have strategy, which is where the decisions get made.
Mm.
Okay, now the parts that and oftentimes we think we're going to get a system and it's going to solve our problem, but that system, right? So you have your QuickBooks file, and QuickBooks, I want to highlight to everyone, is a wonderful program, whether you're using QuickBooks, Zero, whatever. It is not going to be the only system. It's not going to solve every problem for your business. For a majority of businesses, it will. But if you are say, a commercial landscaper, give me some other businesses of people in your audience, types of businesses.
So home remodeling, jewelry store.
Okay.
So that we have some attorneys, like we have some service only providers, but they
Sure.
sometimes carry quite a bit of liability.
Okay, right. So,
Would do-
and then I talked about the medical spa before. So if you have to have a customized industry system, right? You've got to make sure that the workflow that you're executing, how you deliver your service, how you deliver your product, the system and that delivery are in alignment. That is where things get broken, right? Because um, again, back to the medical spa, it took several years for us to get them to a place where they're level set, but their workflow was bucking up against the system they had decided to go with. Their data. So when we walked in, started working with them, their financial data we had to go back to the system before that
Wow.
because it was that misaligned. And then what ended up happening is they invested hundreds of thousands of dollars. And again, this is all because the workflow and the system were not compatible.
Right.
And then they ended up going to a new system. And the new system, the workflow had to be modified a bit, but it matches the system. And then that was able for us to get the data, the sales, the usage, into the accounting file correctly so that we could report on the profitability of the locations.
So let's just say you said something about industry specific software. So we're talking about like there's estimating software that businesses use or bidding software. There are interfaces between like for attorneys, maybe they have practice management software and the payments flow through there. And so their accounting is captured in the software, but maybe not exported properly. So we're not talking about do I choose Square or use Stripe or use a special invoicing, or like if anybody's a government contractor, you have to use sam.gov for all of your invoicing and net 30 doesn't. I have thoughts. So net 30 doesn't mean net 30. It does, but it doesn't, right? So like
For the government.
yeah, the E and EBITDA is lagging by about 3 weeks typically. So so and I mean that with love. I was a government contractor, but um, the the thing here is, what I'm hearing is anything that maybe has dollars attached or counting attached or mileage attached or any of those things, there are probably places in a business where there is a number of some kind. I mean, coffee roastery, right? That maybe you don't realize. Like we have shrinkage when we roast a pound of coffee, you don't get a pound out, it dehydrates the beans. And so we have to do those maths because you don't buy coffee from the supplier in anything but kilos or pounds.
Right.
So for us, we had to capture that, what we call, I guess, shrinkage might be the
Shrinkage. Yeah.
closest term. We had to capture that.
Correct.
So I don't know if the people listening in are
So that goes into your cost of service, cost of goods sold.
cost of goods, yeah,
Cost of goods sold calculation.
but the idea here is it's not just whether or not you're using QuickBooks or whether or not you're using Stripe or Square or your bank's merchant services for credit cards. It's the systems themselves, even if they talk to each other, may not actually be providing the correct data in a rate that allows you to make timely decisions.
That is 100% correct, and it goes back to how you're executing the delivery of the product or the service. So, and business owners understand that, and I think that's the disconnect for most, right? It's like you understand your business, you intuitively know it, and I often find business owners intuitively know if their numbers are wrong. They don't know how to get them right, but they know they're wrong, and they know how to deliver their product or service. So that's where the workflow, and when I say workflow, I mean it's like you take the coffee, right? You grind it, you put in a pound, you get out, I don't know, just let's say 98% of that.
Right.
Right. But it's really just understanding that and then perfect, like you really do want to run your business kind of way like a McDonald's is a franchise. And the reason why it was one of the most successful franchises is because there was consistency from location to location to location. Now, you're probably sitting there listening to me saying, well, I only have one location. That doesn't matter. But it does matter because you want to. I find the most successful and profitable service providers, whether you have a hybrid service, and what I mean by that, a product and a service, are the ones that consistently deliver their product or their service the same way. It's not customized for each person. It's not left to perception. It is we do step A, we do step B, we do step C, we do step C, D, and then you price it to that. And if you're not doing that, that's where I refer to it as your price breaks.
Right.
Because the structure is not there to support it, the pricing.
We call it being boring in the most amazing way around here. It's like, is that boring? If it's very boring, then that's exactly what we should be doing. If it's causing any sort of creativity, then manufacturing is going sideways, right?
Yeah, there you go.
So, but let's get into the, let's just walk through like the med spa. Let's walk through the places where it's owned by financial operations or we're inserting those number pieces into operations. What pops in my head initially is, especially if, let's say, they sell product at the spa, from when you make the order, those are numbers that you need to track. The receiving are numbers that you need to track. If you had a broken bottle and you had to send it back and get a replacement. I don't know if people think granularly about, oh, I got to put financials in my operations. It's like, it's not about the money when we say financials all the time, right?
Right. It's not about the money, but
It's all about the money.
it's all about it's all about the money. But okay, so let's break down a medical spa, right? So they had a service provider, right? Who most common service people are getting is Botox, right? So you have a service provider, let's just say that takes 30 minutes of their time from when they go in and they talk to the client and then they're diagnosing, they're filling the syringes, and then they're doing their magic, okay? Then you have the product piece, right? So if they're doing, I don't know, I mean, I actually think the provider, from my understanding, is going in, they're looking at the client and they're saying, okay, you need 6 syringes, right?
Mhm.
So then there's a unit cost for each of those syringes. So both sides of that, the labor, so the person is the labor side, and then you have the Botox, but then you also have other things in that room, right? You're in the room. So, oh, they put on a robe. That robe needs to be laundered. They had a medical assistant come in and they gave them, I don't know, let's just say they've massaged their feet or something. I don't know, crazy. But there's all of you have to think about the you want to think about what you're delivering
Yeah.
and there is a cost associated with each piece of that. And some of those things are what we call loss leaders, right? Because we want to offer that so that the experience is the experience is, elevated or whatever you want to call it. But but if you understand how you deliver your product from the labor to the hard costs, your pricing can support all of that. And then it rolls into your marketing, right? Because it becomes your messaging and your branding, right? Uh, to me, finance and marketing go hand in hand, right? Because it's like if you're delivering your product consistently, that's your differentiator, right? It's like, this is how we do it. We do X, Y, and Z. This is the transformation. This is the result that you're going to get. Marketing can take that and run with it.
Right.
Yeah. So,
Yeah. So marketing as a financial operations, right? So I know there's people out there and they're like, I know my ROAS, I know my return on ad spend. But it's not just the analytics of what you're returning on the marketing. It's
right.
probably whether or not you should be investing in a particular channel.
Right.
So again, there's a little bit more to it. But we keep saying we're not going to make this complicated, and then you and I are talking about these 19
I
variations,
know.
and everybody's driving, and they're just like, my gosh, what's going on, right? Because we keep saying we're not going to make this complicated, but I agree with you. Finances touches every single thing you do, whether your supplier jumped up an extra 4 cents on something
Yes.
over the last 6 months, and then you go back and you readjust, you make the decision,
Yeah.
do we absorb, do we change? But those seem like, decisions that most small business owners would be like, oh, that went up. We need to look at this because that's a trigger, an external trigger.
It's an external trigger.
What I'm hearing from you is, wait, 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 where are your internal triggers?
Yes, that's exactly right. And the thing is, when everyone who runs a business understands how they're delivering their service. What I'm challenging them to do, and it's really a one-time thing. Unless you modify over time,
Right.
but just sit down and just do like step 1 and then do an arrow. Like, this is what we do: step 1, step 2, step 3, step 4. Write down the 10 steps, right? And then go back and ask yourself, what financial impact does this step have? Oh, none. Okay. And maybe it does it, right? Maybe and there are some steps that don't, but it's either a labor fee, or it is a hard cost, right? It's one of the other. And you can quickly identify what that is. And you can tighten your profitability pretty easily
Right.
by just asking those questions. Yeah.
Yeah, I don't think it might be rarely that we just got into a space that was too expensive, and so now we have this, hard lease that we have to pay for. That's not typically. I mean, it might have been a decision that would have been different at a different time, whatever. Everything is a snapshot in time in business. But,
Correct.
I'm not hearing that you're coming in as a financial architect and saying, "Oh, you overpaid for your lease." You're saying, "Oh, you are leaking in all of these steps where you're not capturing like
Yes.
you're really doing, or you don't
Correct.
have anywhere in operations to account for these things, and
Yes.
so accounting doesn't get the data correctly."
Correct. So back to the medical spa, right? So when one of the things that they needed to come up with, right, was a standard cost. And they resisted doing a standard cost, right? That's how we're gonna use a standard cost to calculate cost of goods. They resisted it because they said, well, and they were allowing the what do they call the gals? The people who actually insert the needles, I forget.
Yeah, yeah,
But
as
they were
technicians.
they were they were letting them influence this calculation, and I'm like, they're like, "Well, it's different for everybody." And I'm like, "It's not different." And it took a while to push back on it, but once we finally got them to understand that you're doing the same thing. You might be doing 6 syringes, here, but you're doing 3 over here, whatever. You're still doing 1 syringe. How much does that cost? What's the standard cost with the shrinkage? Okay, so that's what I'm trying to get to.
Right.
So the thing is, once we went to standard costs, and then they were following the process. So then the next step, right, where we found the leak, we implement the standard cost because they said this is what it is. Then we had to tighten up the delivery, the execution of that, because some people were still operating outside of the defined definition of what the standard cost was. So there was some micro adjustments that had to be made, meaning um, we actually, I think in some instances, increased the standard cost because to give the true quality that they wanted to deliver, the amount that they were using needed to be more. But in other instances, we just needed to tighten up the delivery process. Okay. Yeah. So it's really the micro adjustment. So once you have the data, or once you decide the process, you can that's your baseline. You adjust up or down from the baseline.
Why do you think or in this case, the med spa, like all the people that were trying to influence, why do you think they were so resistant to having like that standard number where we can work from?
Yeah. So for me, what was really fascinating about that particular client was there was no financial voice in the company. The company grew fast. It grew based on the providers that they had. The providers were well known. People came to them for that. So they built their reputation on the reputation of providing quality luxury service, and they didn't wanna mess with that, and they kind of felt that if the providers were feeling like, "Well, if you put that restraint on me, I can't do my job."
Mm.
And I challenged that by saying, "Yeah, we can. You can do your job. You're gonna be able to do your job better. You're gonna be able you're" and really what what ended up happening is, these gals make commission on the sales. 'Cause they're salespeople. And what I did is I said, "Well, you're gonna be more profitable. You're gonna make more commission." So you have to kind of speak the language. But, what was happening before it really, believe it or not, in about 8 or 9 months, it took 8 or 9 months, but they really did finally start to see their commissions were staying higher. They weren't having these commissions that were going up and down. They started having the commissions go steadily up. Yeah.
So you said that there was no financial, so with 4 locations, did they have a CFO? Did they have
Yeah.
an overarching?
No, they did not. So
No.
what happened is they had grown fast, they had a bookkeeper. The mentality was, and this is not wrong, it is just, "Well, I just need a bookkeeper.
Mhm.
I just need a bookkeeper." That's because most businesses, don't and business owners are intelligent, but most businesses don't realize that as the business grows, the role grows, right? And it's often sitting on one person's shoulder. And yes, you do need a bookkeeper. And yes, there's going to come a point where you need a controller, you need a CFO, but you probably need them on a fractional basis. So probably 20 years ago, like trying to find that talented and this is an old mindset that's still coming through. You couldn't bring on good talent 20 years ago. Like a good CFO, a good controller is not going to come work at a part-time company. They're not going to do the bookkeeping. They're not going to do the lower level transactions because that's not where their expertise is. So businesses still think I can't get the talent that I need. And what I do is when we go in, we actually architect the financial ops piece. We're like, okay, this role, let's just call it a revenue ops coordinator, right? And they're the person, say, who owns the contract from when it walks in the door to understanding the profitability. They're tracking the profitability of that contract, and then they are the liaison with the accounting department. So we create that role, we liaison with them, but my company then ends up providing the accounting services, the reporting services. But then you also have the controller, right? That higher level person who you now can get on a fractional basis. But
Right.
what basically what we're doing is we're architecting, let's say you're currently paying someone $90,000, right? And with benefits and payroll taxes and all that stuff to be your full-time bookkeeper. And you're making, I don't know, $7 million. Okay. That one person's skill set is probably that of a, full charge bookkeeper, right? But you're not getting the information that you need. You're not getting the KPIs. You're not getting the strategy. You're not getting someone looking at your cash flow. Guess what? For like maybe $112,000 or $125,000, I can redesign their accounting function and financial function to get them the depth that they need in their organization. And everything is fractional, right? So you have your fractional accounting, but you also then get the support people you need internally. And that's the piece people miss. That's the piece they miss. I always recommend invoicing stays in-house.
Oh, yeah. Um, it's interesting as we're talking through this because as I'm hearing you talk about where financials need to hit, I know there's people who are like, but financials is separate, right? So we have sales, marketing, financials, operations. Operations and finances are typically, they meet to talk about the money, the profitability. But really you have to have people who understand these finances in that operational piece.
Yes. Yes.
Especially with like 4 locations. So you're saying CFO or revenue officer. What you're saying is you need somebody who is looking at every single stage of operations and tracking those numbers as well. And
Yes.
that's the talent that a CFO can bring that a service bookkeeper probably doesn't have the experience with the operational piece of
And
it.
and a good COO will also have that, Robin. So you don't necessarily need a CFO.
Right.
You might need a COO, right? Somebody who understands the delivery, the execution has to be, whether it's a service or it's a product or manufacturing, it has to be consistent. And a good COO will run that tightly because they're the one, a good COO. And when I'm talking about financial ops, you're really talking about that gross profit, right? The delivery of the service or the
Yeah.
product. Yeah.
Absolutely. And, again, COOs can be fractional, right? So to your
Absolutely.
point, 20 years ago, there was this, I call it the messy middle, where you're not quite big enough to hire a
Right.
C-suite or you have a director or two, and then you're not quite able to pay for that or you don't feel like
Right.
you can. And
Yeah.
then, the little part where you're I'm gonna say diluting yourself because I've done it myself, where it's like I'm diluting myself going, well, we're not big enough to worry about that yet. And there's this messy middle ground where you start to
That's middle.
see this is going on. How early or how late do you think people make these decisions? 'Cause I think that would be the last thing. Because if you're driving in the car, you're doing your run, you're doing whatever right now, and
Yeah.
you're listening in and you're like, we don't capture
Yeah.
the financial impact of every step in our company.
Yeah.
Uh,
So I think that if your revenue has plateaued, right, and you're not quite sure why businesses grow, you might be bringing on new incremental business, but you're still plateauing. That it's time to step back and look at the process and see, you know, maybe it's just one tweak, right? And the thing is, so so the medical spot had many layers I want to qualify this, many, many layers and many, many things that needed to be, um, I don't want to say corrected, just elevated, right?
Accepted, yeah.
They grew fast and their systems just didn't keep up. So, but to a, a typical business right now who's hearing this, I want you to think about, just go back. It's like, it may not be as complicated. It may just be like, oh, okay, I just need to kind of look at this. But your revenue staying flat, your cut costs, because that's the first place everyone goes. They cut costs, and then you're kind of hollowing out the business,
Yeah.
right? And the business can't get creative. I'm going to tell you, I look to I'll use a health analogy. Everyone is so big into detoxing, right? Detox, detox, detox. But what if you nourished as opposed to detoxing, right? Um, and you like, there's a great story. I'm going to date myself, but do you remember when they had the Alaska oil spill?
Valdez.
The Valdez, yes.
Yeah.
So when they went in and they cleaned up right where that happened, they actually used products that killed nature. Okay. So they detoxed. But a couple miles away, there was a village who actually used natural ingredients that ate the fat of the oil. Okay. So it was a natural ingredient and they nourished, and that whole village came back within 18 months. It's fascinating, right? To take a nourishing approach. So how does that analogy relate to what we're talking about? You want to nourish your delivery.
Mhm.
That's where your money is. It's not in cutting the costs. It's in refining and systematizing, creating that consistent process on how you deliver your product or services. So
That's an excellent way to look at it. Nourish your services or nourish your delivery. So, where can people find you if they need you? How can they lurk on social media? But where can we follow you in the
So
architecture?
you can come to, so if this is resonating for anyone, please visit me at my website, SumSolutions, SumSolutions.com. And if this is resonating with you and you want to talk further, you can book a free clarity. I call them financial clarity consult. Go to the evaluations page on my website. All the way at the bottom, you can book a call with me and we can talk about what's happening in your business, because everything I do is we start with an evaluation, right? We start with that baseline and we figure out what's going on, and then people can make a decision from there. So yeah.
Amazing. Well, thank you so much for such an important topic. And really, nourishing your delivery is such a great shift and way to look at growing your business rather than just cutting the cost. So, uh, ending on that note is brilliant. So, thank you so much again. It's wonderful to have this discussion.
Thanks, John. I appreciate it. I had a lot of fun.
All right, we'll talk to y'all next time on the next episode of the Business Mastery Podcast. Take care. Thank you so much for listening to this episode of the Business Mastery Podcast. If you want to learn more about me, you can go to dawnkennedy.com, and you can now check us out on YouTube, as well as, of course, any of your favorite platforms that host podcasts. Take care.